Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin again. I promise we'll look at some other assets before the end of the week, but a lot going on in the crypto space, a lot of volatility, also in the commodities at the moment, so they tend to be taking up a lot of my time. But we are only going to be looking at one count in Bitcoin today. This is now my primary count and primary interpretation. And we're going to do our Elliott wave count first, and then we're going to do our basic technical analysis. But we're going to look at some other technical clues here as to why I'm still supporting this count. So a quick reminder of what we're looking at. Starting from our high on the 21st of February, earlier this year, we are in a free wave expanding flat pattern, as my count has it, with 5 waves down in the sea yet to complete. Like this. Okay, pushing a little lower, that's what we're expecting. So abandoning the idea of having bottomed on the 19th of May, not completely, until we break that low, it's still possible, but in this count, we are just focusing on the idea of moving lower. So A, B, C, 5 waves in the sea looking to complete. So let's just hide these waves again. Alright. And let me show you a couple of things that help support this count. Firstly, we have no wave 4 invalidation, that's nice. We have an excellent relationship between the wave 1 and the wave 3. If we come from the top of the wave 1, down and then back up to our wave 2, we get a 1.618 extension for our 3, almost to the tick, which we like. That's very nice. So given that extension in the 3 to the 1618, 1 and 5 will likely share some degree of parity with one another, hence why 1 from 4 in C is one of our targets down here at 23,420. So how does this overall correction look from a geometry point of view? Is it well contained? Does it make sense? And I'd argue that it does. So let's just bring up a pitchfork I've got here and talk you through essentially how the price has been trading within this structure the whole time. So first we come down from our high to our swing low, external swing into our expansive B. This is the bottom to the top of the pitchfork, started from the top of the primary 3. We come down to test the territory of the median line. Here, we wick through but we body above it. We come back up near the outer bound but not quite, failing in that shortened C which we had as I think we had as a diagonal, I can't quite remember. Been a while since I've come in and looked at it, but either way we don't quite make it to the top of the pitchfork again, but we get within the territory of it. Come down, test the median line, back up, break through the median line to the bottom bound of the pitchfork here. Okay, then we work our way back up and test the median line again, and now I think it's likely that we're going to come down and test the outer bound again. So you can see how this A, B, C swing has contained all of the price action since. So a lot of people, one of the complaints people have made about this idea of an expanding flat here is, oh well, this C is getting ridiculous, it's getting too long, it's far too drastic, it's far too steep, it's not really, it doesn't really have any, relationship to this A move here and this B move here. Well, I disagree, and I think this pitchfork helps support my case that it has an excellent relationship with this initial A-B swing, and it's all been contained within a pitchfork based off of those two pivots. So that's a pretty sound argument, I'd argue, from a technical perspective. So I like that. So that fills me with a bit more confidence that this is likely right. No invalidation of the 4, like I said. Don't pay too much attention to this count here. I've literally just slapped this on just to try and get an idea of how things are developing as we move lower. So now that we've established that we do have a nice shape and a nice self-contained piece of geometry for the whole move here, if we just check how our 4 waves, our 5 waves are coming along as we come down here, we can see that in arithmetic terms we have drifted out of our standard pitchfork here. We've come through the median line, tested it a couple of times, back tested the median line, come to the outer line here, back through the median line to the outer bound, outside of it. I think if we shift the chart into log for a moment, this actually suits it better. We get a better containment of the price. We get that volatility spike to the far outer bound, but we don't body a candle below the outer bound, the inner outer bound of the pitchfork. You see what I mean? With the spike, 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 spike. And then we come back to the outer inner bound of the pitchfork here. We're currently around the median line, and we could easily thrust down to the outside of the fork again to any of these fib confluence levels. The 61.8% of primary free in our arithmetic scale puts us at 24,774 spot 59. The 1 from the 4 inside of the C is 23,420, and the 38.2% retracement of primary free in log scale is 2658 spot 91. So this pitchfork, if we're going 1, 2, 3, 4, I mean, yes, you've got a fifth wave on the way, but it doesn't quite look complete. You know, we are around that median line, but we haven't made a lower low. So another thrust down, and I think you'll have a completed 5-way swing inside of this pitchfork, of 5 ways within the greater pitchfork of the A to B to complete this expansive ABC expanding flat pattern. So it all still currently trades pretty neatly, being honest. So that's how I like the look of it. I think that's pretty strong evidence to support it, really. So looking for the price to settle somewhere in this box between 20,600 and 25,000, essentially. Now, caveat. Although we're looking at 1 to 4 parity, because we had that nice 1.618 extension in the 3 of the C, that doesn't mean we have to do that. We could come down and complete just beyond the 3. A wave 5 doesn't have to have parity with the 1 if we have an expansive 3, which we've had. It only has to just poke its nose just beyond the 3. So we should be on guard for any impulsive reaction to the upside. If you see a clearly impulsive action on a smaller time frame of 5 ways up, 3 ways back, then we start moving higher again, there's a chance we've bottomed. Preferably we would like to see it, of course, beyond where the free completed on the 19th of May. Otherwise we would be looking at a 5th wave truncation, which we've already had to assume once already previously, which we don't like doing. So, but once we break through that low, which does look imminent, it could, we could turn around from here. It does look imminent though, at 30,066. If we break through that low, you gotta be on guard for the possibility of that 5th wave completing anytime soon. It doesn't have to make it down to these targets. These are just likely targets, likely Fibonacci confluences for the wave 5 to reach, and there's still more than 10 grand which could fall out of the market. Okay, and still be within these bounds. So just keep that in mind. If we clear the 3, you've got to be on guard if you're a bull looking for a possible reaction, an impulsive reaction, signaling the low. As far as the current count goes, like I said, let's not pay too much attention to this. I'm still fleshing this out, and it's always one of those things that as things develop, you always need more price data. So let's just come to 15 minutes. So let's just talk our way through this wave 4 correction for a start, because obviously in my bullish interpretation I was arguing for a truncation in the 5th of a triangle. Now since we've come all the way back to these lows, we haven't gone through them yet, but I'm assuming that we will for the moment. We're saying instead that this ended up being a WXY with a complicated X wave. We had this triangle within the B wave of the X wave. Okay, and then we had this 3-wave swing. This was not impulsive, it turns out. This was a 3-wave swing. Impulsive A, impulsive C, and corrective zigzag in the B. 3-wave swing A, B, C into the Y, into the 4, and now we've been impulsing down since into our 5th wave. And so far I've got this as a 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So typical expansion or extension here in minute 3. This could all be shifted at 1 wave degree, and the 3, 4 might not be in yet. If you see what I mean, this here would become minute, this here would become subminute, la la la, so on and so forth. So this may be a 3, 4 still developing, and then we're going to get 5 waves down in the 5th of the 5th of the C of the 4. So like I said, if this was correct so far, you wouldn't be expecting a much further move in the 5th, to be honest. If this was still expanding into a 3, and the 3 isn't in yet, then yes, there's plenty of room for the 5 to come down. So we're not putting too much, faith in what we've counted so far inside of this small move. Right then, so that's basically how I see things from an Elliott wave point of view. We're just going to, I think I put up a... Did I put up a fixed volume? I'm sure I did. Let me have a look. Yes, I did. So yeah, all I also wanted to show was where our point of volume is at the moment. All I've done here is taken all of the prior wave move up of the intermediate 3 to present day. So from the start of the intermediate 3, because we're expecting our fourth wave to settle somewhere inside of the wave 4 here. Now, we look like we're going to go beyond it, that we're going to go a little deeper. Now, of course, it depends how we've counted this, but I'm counting all of the prior wave 3 on the intermediate degree, and then, of course, not all of the primary wave 3 from the primary 2 bottom, but from the minor 4 into the intermediate 3. I've taken all of the volume from there, and if we bring up a visible range as well, you'll see that we basically, depending on where you're looking at the chart, the volume at the point of control moves lower as we get lower and lower towards the beginning of primary 3. But if we come in, you essentially get an overlap in this area. This is where all the trading's been going on recently. The peak of the volume between the buy and sell. Our point of control overlaps here. So this is why we've been consolidating in this rather confusing higgledy-piggledy pattern. A more time-consuming fall, throwing everybody around, confusing everybody. Algos fighting one another. It just helps explain why we've been struggling with our interpretation over the recent price action. So, alright then, let's hide that now and see what we can see on our indicators. Let's get rid of our count and just get it out of the way so we can see more clearly for the moment. Right then. We're here on the daily time frame. Let's bring up our exponential moving averages. We have a 10 in yellow, 20 in blue, 60 in orange, 250 in green. And then we have an RSI set to a 10 close with a green 30 level representing oversold, red 70 level representing overbought, MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. So we'll come out to the weekly time frame first, see how much damage we've done on the weekly time frame. So this has been a major level. The orange line here, which is the 60 EMA. Excuse me for one moment. Now, remembering that we're assuming we're in a fourth wave, now in a fifth wave, heading lower to find our low. So capitulation is what we'd expect to see, and capitulation should really come when some significant shit has been done to the chart. Some significant damage, and a break of the 60, I think, would very much, in the minds of non-Elliott wave traders, let's say, more traditional technical metrics, a break of the 60 here would be a pretty strong sign that bad news and that we're into a capitulation move. This is traditionally, not always, but it often is synonymous with finding the low. When we break major support and everything looks bearish as hell, you're closer to the low than you are the high by definition, so you should be looking to find the bottom, but it tends to be when the capitulation, the last people actually throw, the retail sector actually just throw in the towel and give up right before finding the low. So we're obviously looking to try and do the opposite. We're looking to try and buy it. But below the 10, below the 20, 10's cross over the 20 with the price below. It's still holding the 60, but like I said, if the Elliott wave count is right, capitulation should come below this level. If we bounce from here, maybe we have to consider some kind of alternative correction, or maybe even a truncated, completed correction, which is leading into an impulse. But I would expect to see another thrust lower, break a major support, maybe one final thrust down from overbought to oversold on the RSI, just to get everyone who's ready to give up to give up. Okay. MACD has been bearish for a while. A couple of lighter bars on the histogram here for the weekly, but this is just showing these green bars here. Essentially this three wave swing, bop, 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 before heading lower. So a darker bar occurring now, looking to be accelerating to the downside again. Okay, on the daily time frame, below the 10, 20, 60 and 250, just bearish all round. Have been trading around the 250 exponential moving average. 60 is getting closer to it. A crossover that would be traditionally seen as bearish. Once again, as I've explained and given examples of in previous videos, when we do get that ultimate kind of daily death cross of the 60 over the 250 with the price below it, you're normally close to finding the bottom. It's in that state of despair that we tend to find the lows. Alright, now I know I'm sounding like uber bullish, like trying to talk you into it. I'm honestly not, I'm just talking from experience. Now, RSI, this is going to be really telling. I think this is going to be really telling in the next few days. We've currently got this upward trend in the RSI, which is now broken, and we're now moving lower. But we are very close to setting a new low. So if we have a quick thrust down in the fifth, and then we bottom, and then we impulse out of here, it's likely, given where we are on the RSI, still above oversold conditions, it's likely we would put in a higher low on the RSI, and therefore have bullish divergence between low and lower low in price, and low and higher low in RSI. And I think I would argue, looking at the MACD, for the same. If we were to break down now a couple of red bars in the histogram, we've had a short-term crossover, the long-term moving average suggesting further momentum to the downside is coming. The red bars are growing on the histogram again. So this all supports the idea of one thrust lower, right? But it also supports the idea of that thrust lower likely resulting in positive divergence. And that would help signal the completion of a 5-wave move, the completion of a correction, and a likely pivot point for our low. Like I said, it would also coincide with causing serious damage on the weekly time frame, which is a traditional, capitulation kind of moment for people to just throw in the towel and give up. Right then, guys, well, I hope you've enjoyed that. If you're new to the channel and you have enjoyed it, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Thank you, as always, to my patrons. Your support is greatly appreciated. If you are interested in becoming a patron, there's a link in the description box below. I would suggest that you leave it till the start of July, the 1st of July, so that you don't get charged for this month and on the 1st of July. So perhaps consider leaving it a bit later, but it's totally up to you. Also, if you're not following me on Twitter, there's a link to my Twitter feed in the description box below as well. Alright, guys, take care, and I'll be back with you later in the week. All the best. Bye-bye.